Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the commodities. We'll start it off with the dollar and going to be watching for the potential of the dollar starting to have more of an impact on the commodity space. In general, the relationship is inverse between dollar and commodities. And recently, we haven't really been seeing much of that, in my opinion, because the dollar has really been slow and steady and keeping its daily uptrend. We've now lost the daily uptrend with this little lower high and lower low. And now we shift our focus. We zoom out to the weekly time frame. So the weekly chart's been an uptrend for 4 months. And we can see that the last little higher low was down at 97.86. So anything above 97.86 keeps the weekly uptrend intact. But there's also a setup here of a potential head and shoulders pattern where we have, this is the 2-day time frame, just to condense things down a little bit, but it's the left shoulder. If we hold 97.86 to start this week, bounce, can't get back up to our recent high, and then roll over, that would be a loss of the weekly uptrend, and that would be notable in the commodity space. If that happens and we lose the weekly uptrend, we then zoom out to the monthly uptrend. The monthly chart has been in an uptrend for about 1 year and 8 months, and it would be very notable if we were to lose the monthly higher lows. So anything above 95.84 is a monthly higher low. So that's how I do a lot of my technical analysis as far as navigating different time frames. When a trend changes on a shorter term, I zoom out and look at the bigger picture, and we just have trend within trend within trend. When we break one, we look at the other one. And if we were to lose the monthly uptrend, we zoom out to the yearly chart, and we would be watching for the potential of a bit of a tightening range and equilibrium. Let's see it on the 6-month time frame. We would have the bull move, the high, low. This would be our lower high if we lose the monthly uptrend, and we would then look for a higher low compared to 88.25. That's looking way out in the future. We're only concerned with the weekly time frame for now. I've also noticed, as I said, the lack of inverse correlation between gold and the precious metals. It's almost like the precious metals have taken away the link between the dollar and latched on to the markets. And it's been a stronger inverse relationship between the precious metals and the markets than it has between the precious metals and the dollar. I've watched in the past few years, there's been times where the dollar and gold are inverse tick for tick. And recently, it's been almost like the market and gold are inverse tick for tick. In my opinion, why is gold holding up so well Friday with the S&P 500 blasting through resistance? In my opinion, it's because of the dollar weakness and the loss of the daily uptrend. So we look at gold. Gold did see a weakness on Friday, no doubt about that, but we didn't break the low of October while the S&P 500 blew through the high of October. So the most important level for me on gold is that low of consolidation. And we have a little double top 15, 19, 15, 16. If this low breaks, we're in a scenario right now where the weekly has lost the uptrend with a lower high and lower low, but that lower low got no bear follow through. And we're still holding very strong. So a change of the trend with a lack of follow through means zoom out and look for a potential flag. And this is a monthly bull flag right now. If we break that low of consolidation of 1459, in my opinion, that's going to be an indication that we are not in a monthly bull flag pattern, and the pullback has to be more significant to find that new support level. The fact that the S&P 500 is strong right now definitely makes the gold bulls a little bit nervous. The gold bulls want to see the S&P 500 lose the weekly uptrend and the dollar lose the monthly uptrend in a perfect world. So we're watching those relationships, which are constantly changing. But as of right now, for gold, it's all about that low. That's the range for me, 1459 and 1520, essentially. And we're right in the middle of it. Silver is holding on a bit stronger than gold. We still have a little daily higher low at 1725. That has not broken yet. We're in the same scenario where we have lost the weekly uptrend with no bear follow through so far. And if we break the low of consolidation of 16,876, then the odds of a monthly continuation pattern will be less likely. And from there, if we break that low of consolidation, the most likely pattern for me would be an equilibrium. We have our high. If this is our higher low, we can see continuation from there. if we see further pullback and we have not found our support yet, I'm going to be looking for a monthly equilibrium to form on silver into next year. Looking at the miners, so I'm looking at GDX here because GDX has a bit of a double bottom. As far as what I'm concerned with, it's considered a double bottom for me, where we only broke support by 9 pennies straight into a bounce, and we're now in a situation where we have just a tightening range. We hit support, top of the bounce, double bottom, lower high, and we're coming down to that support again. 26.51 is a very key level. If we were to be in hourly oversold conditions Monday, testing that support, there's a potential bottom fishing play off of 26.51 support. You would want to leave some wiggle room, just like the last time we broke support and then bounced 9 cents after. So you'd want to leave some wiggle room for that to be a possibility. All depends on how we approach that support. If we're not extended, I'm not going to be making a play off of that support personally. What I am going to be watching is dust, bear minor, because it's a nice equilibrium where we have our low, high of the bull move, higher low, lower high, higher low, had a nice double bottom on the Tuesday, Wednesday lows, and we've seen really nice follow through now. It's all about 846 this coming week. If we reject from 846 the first couple of days this week and we lose the hourly uptrend, we're then going to pull back and look for a higher low to form and to stay in this tightening pattern either into the end of next week or early the following week for a clear break on dust. So that has my attention. I love constricting patterns when they get breaks and follow through. That's definitely one of the easier trades in my opinion as far as momentum goes, and that will have our attention. Oil changed the daily trend bullish, not surprising because of the direct correlation with the S&P 500, and we are seeing a daily trend change on SPY and a daily trend change on oil. We're definitely looking for a weekly lower high on oil compared to the Iran top at 63.33. That's a lot of space. That's a long ways away. So bulls want to keep a higher low pattern as long as they can. But again, we are looking for that lower high compared to that level. If we were going to condense things to a 2-day time frame, pretty much high, low, scouting that lower high. But what's most important for me on oil is going to be this base at 50.51. That is the level that I'm watching for the rest of the year, because if that level breaks, the odds that SPY loses the weekly uptrend increase significantly for me. And if SPY loses its weekly uptrend and this level is still holding, it's going to increase the odds that oil is going to break that support level. So I'm going to be watching both of these markets, and when one gets a crucial break, I'm going to be looking for it to potentially be a lead indicator on the other to get the same break in the same direction. So as long as oil holds 50.51, the S&P 500 has better odds of keeping its weekly uptrend, in my opinion. Natural gas, still very weak. Anything on the daily under 238 is just a lower high, and we are looking back down at our low. I do anticipate that 2039 is going to likely hold, more likely than not, on its initial test. And we're going to look for a weekly equilibrium, low, high, scouting a higher low, and then we'll look for a lower high. So I will be interested in natural gas this coming week and watching the 4-hour exponential resistance, which the last 4 days, every rejection is coming from the 12 and 26 period 4-hour exponential moving averages. And I'm also watching for the potential of any kind of falling wedge or indication that the bulls are, or I should say that the bears are losing their momentum. So there's a nice downtrend resistance line that's been in play for 3 weeks at this point, and we only have a couple touches on this support line, but something to potentially be watching. And if we make a play, it'll be based off of 2039 support. So that's still a long ways away, and I want to be cautious. I'm not just going to make an entry and then put my stop under 2039 because that's way too much risk on the trade. But I'm going to be watching the shorter term time frames to establish a support level that I can try and make an entry based off of on a longer term perspective, and then use that shorter term level as a stop. So it's something we're going to be watching because, again, the most likely scenario for me is a higher low on the weekly compared to 2039. So I want to be watching for that momentum shift for that to be pretty much to be seen to give us indication that that is indeed the most likely scenario playing out. So that's where we stand in the commodity space this weekend. Hope you have a good rest of your weekend. Thanks for watching, and we'll see you next time.